Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday, the 22nd of December, 2021 at 5:50 p.m. Now, before I get any further, I know a lot of you watch me regularly. It would help me a lot. Tell your friends about this channel. That's how we get people coming to it. Number two, if you like what you see, give it a thumbs up, as you know. That helps a lot, too. Another thing I want you to do, I want you to start writing me on YouTube and tell me the markets you'd like me to cover for you in the futures arena. That's where I'm going to do this one. In the Spider ETF, I'll do that. So I'll pick each week a market or two that you write me about. I'll highlight it. We'll go through it in a little more detail there, and we'll bring it to life. How's that? So you tell me what you want to do. I'll try to bring it alive. All right. We're in that Santa Claus time. Now, that does not mean that every day has to be an update, but I think that between now and the beginning of 2022, you're going to see the market finds an easier path up than it does down. Why? Most of the harmful economic data is out of the way. We know about Omicron. We know it's going to be worse. We're already seeing colleges now going back to virtual learning. You're seeing ball games, be it the NBA, the NHL. We know they're canceling them. That does not mean the situation is as dire it was when Delta began. It can be bad in raw numbers, but the markets have a way of looking through things. That's what you've got to look at. Gold has to determine, is it focusing on inflation, and is there enough there between now and the end of March where it gets comfortable to try the upside? It's really that simple. Markets like copper, copper market's going to count on the economies of the world staying good, supply chain demand coming alive, things of that nature. Auto, when they get back to normal, you'll see platinum, palladium markets take off with that as well. Now, when we take a look at gold on a weekly chart, you're still down $2, but you were down a lot more than that this week. And on a weekly basis, you're just sort of hanging here right now. For the week, the market is all of $4 off the high of the week. The bias is up because prices are over the 18-week average of closes. Next, when I look at the chart, it's the same thing. We tried an upside, we tried a downside, we didn't go anywhere. This sideways action causes the Bollinger Bands, when we get to them, to wrap their arms around the market. I'll show you that in a moment. The near-term trend to the upside, higher lows, certainly higher highs, bullish. The market is now cleared again. It's done this the second time. The key resistance point of the 200, the 100-day average. Once it's gotten back over the 18-day average, it's held it. That's a bullish sign. So the market is displaying bias up since the market's over the 18-week average, and the trend up on the swing line. The resistance is right here, right now. Each time it gets to that black dashed line, the upper Bollinger Band, it's running into resistance, and that's what the Bollinger Band is designed to do. It's designed to keep the market trading within it 95% of the time. So it will adjust to that. Now, eventually, you get enough sideways action, quote unquote, whatever that might mean, but that's how it really works. You get that sideways action, and out of sideways action, you eventually get a breakout to the upside or a break to the downside. Right now, everything favors that the market's at a resistance point, having trouble with it. If it's going to break out, what it's got going for it is it's got the bias up, the trend up. What's not going for it is that it's overbought. Overbought markets correct in one of two ways. They either become overbought and they embed. That's when the red and the blue line that make up the slow stochastic, they're called a K and a D line. The difference of them is one uses 3 days worth of the formula, the other 5. So it's a data difference. The formula stays the same. And if they both go sideways over 80 for several days or more, that's called embedding, and it often results in prices moving to the upside. But more times than not, you get up to the upper Bollinger Band like this, and you keep getting thrown back until that develops, either upside or downside. Keep your eyes on it. We'll see what it wants to do. The gold-silver ratio is broken down. So we got near 82. We're back to the 79 level. More important, you're under the red line, which is the 18-day moving average of closes, which means the bias is down. Bias down means that these numbers will fall if that stays that way. That means you need less ounces of silver. You don't need 82 anymore. You need 79 to get an ounce of gold, 78, 76. That means silver's getting stronger than gold. Silver, like gold, has got a problem. It's overbought, trend up, bias up right into the upper Bollinger Band where it's running into resistance. In the copper market, we have been going basically sideways for a long period of time. Now, one of the things I'm going to study here, can we get the 18-day average of closes to again get over the 100 and push the market over the top there? That would be a breakout to the upside, calling for a move possibly into the 475 level. Until it occurs, you're at a resistance zone that, what do I think? I think the pros are taking money off the table. It is Christmas. A lot of traders are going to close their books. They've had another rally. That's what you do against Bollinger Bands. Platinum, right up to the upper Bollinger Band area. You know what I'm going to tell you? Overbought market in an uptrend. This is where the pros come out. Do not try to interchange coming out with going and getting bearish. They are not the same. There's the way that I teach it in my enhanced Bollinger Band course. You learn the big difference between the two, and you're looking to see, does the market embed? If it doesn't, it's often a wise move to take the whole position off, and I explain why in the course. $75, treat yourself to the course. It's Christmas time. It's on our website at www.iraepstein.com. Go to the word education. That's where it's at. Higher low, higher high, palladium, overbought. So we have a theme. We've had a nice rally. Just about all the metals are challenging the upper Bollinger Band in overbought conditions. Overbought can embed, but you're not there at this point in time. So I think we just wait and see what's going to happen. Next, in the dollar index, you peaked out at the upper Bollinger Band as I was looking for it to do. Again, what do I teach in sideways action? You often peak out at that number, and then you give a shot back down. Now, does it break a trend? What does it do? Well, in this case, you created another downtrend. So you have lower highs, lower lows, momentum flat, bias up. You have a lot of nothing in this market. So if you want to learn more, what I recommend is go to the education area of our website, www.iraepstein.com, education, and I'll see you tomorrow.